Welcome to Growing a B2B SaaS. On this show, you'll get actionable and usable advice. You'll hear about all aspects of growing a business to a business software company. Customer success, sales, funding, bootstrapping, exits, scaling, everything you need to know about growing a startup, and you'll get it from someone who's going through the same journey. Now your host, Joran Hoffman.
Welcome back to another episode of Grow Your B2B SaaS. We discuss all topics on how to grow your B2B SaaS, no matter in which stage you're in. When you've developed a product, you will have to bring it to the market, meaning your target customers need to learn about your product and see the value it can bring to them. To do this successfully, you will need to have a go-to-market strategy. Today, we'll be diving into what makes a great go-to-market strategy, including the key components that every successful plan should have, avoiding the common pitfalls and the difference between being bootstrapped versus funded. We are going to do this today with Andrew Davies. He is somebody who has seen every side of the SaaS world. As a co-founder at EDO, he raised 30 million in several rounds, scaled the business, and then in 2019, they were acquired by the private equity firm Insight Partners to be part of Episerver, which then became Optimizely. He's now doing investing and advising startups himself, next to being the chief marketing officer at Paddle, a tool we use at Redditus as well to manage our payment infrastructure. Welcome to the show, Andrew.
Hey, thanks for having me. Appreciate it.
I always like to start with this question. Why should people listen to you today? Can you give your own perspective?
Well, I don't think I'm the best person to verbalize that. I'm someone who listens to anybody who's got an interesting perspective to share, whatever stage they're at. So I guess that's probably the most important reason. We can all learn from each other. But went as a co-founder and CMO from zero revenue, pre-launch, pre-product, through to about 60 staff and a successful acquisition. And then suddenly was in a business that was about 400 people where I was running brand, demand, and digital. And that scaled to 1,200 people in 2 years. So saw the early stages as well as some of the later stages. And through that were bootstrapped, were angel-backed, were venture-backed, were private equity-backed. And now CMO at Paddle, as you mentioned, and have gone through another acquisition recently. And then along that journey, I've had the privilege of getting alongside coaching and advising a whole bunch of B2B SaaS businesses on their go-to-market. So probably 15 or 16 businesses over the last few years. So that's the range of experience, and very much I'm still learning.
Yeah, and I think that's always a great topic you mentioned. You're still learning. So even though you've probably seen all the aspects of B2B SaaS, you're still learning. I think that's definitely key to what we do, I guess.
Yeah, absolutely. And I think, the joy I have and the privilege I have of helping other companies, Paddle customers, as well as, just people I know in the industry, is I get a view into their challenges and their perspectives and their opportunities. And I find that a great learning experience to see the pattern recognition build as I see the same kind of problems reoccur, but often different solutions to those problems in different contexts.
And today we're going to turn things around. Instead of you learning, you're going to teach us, I guess, things about go-to-market. Really back to basic or to basics. What does go-to-market strategy mean to you, for you?
Yeah, for me, go-to-market strategy is the strategy that unifies all of your go-to-market functions. So customer success and your revenue teams, your sales teams, and your marketing teams. You might have solutions architects and other teams in there. If you're going to market with a product-led motion, you'll have a very important product function within that go-to-market strategy. And it's the unification of all of those different teams in order to reach, engage, and convert and make successful your target customer. So it's the range of different strategies that you can think about in a holistic sense so you can grow your business.
You mentioned quite a few aspects already, having the teams in place, things like that. What do you think has to be in place before you can really think about going to market?
So actually, I don't think anything has to be in place. And there's a real rise at the moment of founders who are building distribution before they even build product. And that can be risky because if your product doesn't work, and if your product thesis is wrong, or if you can't iterate your way out into a product thesis that really resonates with the market, then perhaps your distribution is in vain. But we see many people starting up newsletters or building their Twitter account or doing other things to build an audience even before they've launched their product. So actually, I don't think much needs to be in place at all. Perhaps apart from the confidence that your product is going to resonate with that market. Traditionally, especially if you're raising money and you're going to go and build the go-to-market function around a product where you've already got some minimum viable product, then yes, you need some confidence that the product is meeting a customer need. And I really don't advise spending much money on building out go-to-market and a go-to-market strategy until you've got that real resonance. You've reached that point where people would hate if your product was taken away. You've reached that point of actually breaking through and pleasing some customers.
Exactly. And I think the reason why people hate your product be taken away is when they get enough value out of that, right? So that is always the key thing, I guess, with every product. Make sure you give your clients value.
Yeah, absolutely. And often we call that product market fit, and it's interesting to think about the various definitions of product market fit. But certainly, I've been in the challenge of trying to scale go to market before there was product market fit, and I've worked alongside a lot of other people who have had that same challenge of wanting to get on with the journey of growth, but without having the discipline of a strong product market fit that you've iterated towards first. And so getting to that proof point where, as you say, you're delivering value, people are telling you about that value, they'd hate it if that value disappeared. Those are all good indicators that you've met that point of product market fit. You now can put some money into scaling.
Exactly. I think maybe that's already going into the next question, maybe a common mistake companies make. Do you see any other mistakes company making when talking about go-to-market?
Yeah, I think with very product-focused founders or engineering-focused founders, I think there sometimes can be a perspective of build it and they will come, and therefore go-to-market is an afterthought. And it's only after not seeing several months or several quarters of people magically growing in their usage of the product and sharing of their product that go-to-market is seen as something that should be invested in. I think another common challenge, particularly with first-time founders, is trying to invent everything from scratch. This has been done tens of thousands of times before in similar situations, and therefore there's lots of good frameworks and benchmarks that you can learn from rather than inventing everything from scratch. And then the third challenge, I think, is that in a very saturated market, and most products are launching into reasonably saturated markets with a strong list of competitors, or if not, then if they provide value, they soon will have lots of competitors. There's often a common challenge of not counting the true cost of go-to-market. As you scale a SaaS business, that becomes often your primary cost base in your business, your sales and marketing functions, your go-to-market functions. And it's very easy to see that as something you can just make a very small investment in and things will still grow. But it usually becomes the dominant investment area for the entire business.
I think that's a really good one because it's easy to keep adding money on top of it, of course, to go to market. But in the end, you have to make sure that you keep your customer acquisition cost in line. So calculating costs, whatever it takes, I guess.
Yeah, absolutely.
I think that's already going into the next question. Can you share some strategies, processes SaaS companies can use to set up the go-to-market strategy?
Yeah, so the very first piece of go-to-market is a deep understanding of who the customer is and what they want and what they need. What are their hopes, their aspirations, what are their challenges, and how do you play into that mix? And so in terms of processes that I'm seeing being used increasingly, one of them that I find really interesting is account-based marketing as ideal customer profile identification. So we talk about ICP, the ideal customer profile, and you want to get that as focused as possible. But many products launching onto the market have a guess or an estimate as what their ICP might be, but they don't have any proof over it. And so one process that I see as part of their launch that many SaaS businesses now adopt is running ABM campaigns, account-based marketing campaigns, into different segments with different ideal customer profiles so they can test which one of those resonates most. That's a really interesting trend I'm seeing. Secondly, there's that process of customer discovery. And we talked about how important customer insight is, but this is not just about having a list of names you're going to go after. This is about having conversations with them from day one, involving them in your product development, involving them in every new feature release, making sure you're hearing back from them how they're working and how they're not working, whether they're actually paying customers or free customers or not customers at all, but constantly making sure you're close to the market. And then the third thing that I think is a really important balance is making sure you are balancing long and short-term investments. And we can come to the marketing side of the house whenever we get to it in this conversation, but there are some marketing tactics that have some very quick results. Pay-per-click as an example. If you're bidding on terms that matter to you, then you're going to get a very quick yes or no when those people see that proposition on your site and go through a conversion funnel. It might not be positive, but you're going to get a very quick feedback loop. There's other things, perhaps like SEO and partnerships, that take a lot longer to pay off. Any brand investment takes longer to solidify. And so you also need to think about that balance of long and term investments when it comes to your go-to-market strategy.
Yeah, and I think that's real good, because if you only focus on the long term, you're not going to get the results you want right now. If you only focus on the short term, you will have a lot of costs just because you're running these ads or you're not thinking about the long term. And I think this podcast is a good example as well, right? We're pretty early stage, but we now run this podcast as a long-term investment. Like, I'm not expecting any clients to come out of it anytime soon, but in the end, this is building the brand we want to be.
Yeah, and I think in the early stage, it's really important to prioritize learning over revenue. It's very easy to try and get those first few dollars, but if you're not learning why people are paying you those dollars and why they might stay with you and why they might pay you more in the future, then really that's just a little bit of cash to help you, fund your business, but it's not building a sustainable advantage. And so I do think that prioritizing how you learn, that feedback loop in the early days of a SaaS company, is really important.
And to come back to what you said before, you mentioned ABM as an ISP identification. Like, do you see there's like an average contract value for companies doing that? Or could you also do it when your contract value is a lot or on the lower side?
Yeah, so account-based marketing as a play, as a strategy, usually only works in the higher deal value, the higher ACV, say $20,000, $30,000, $40,000 plus. But in the early stage, again, if we're prioritizing learning, then that might well be a worthwhile investment to identify specific customers and go after them with a prioritized and coordinated set of messages to different decision makers. Because again, what you're going after in that early stage is feedback. And ABM is a great way of getting feedback, because people respond to that message or not. And there are specific people where you can get a specific yes, no, or maybe. And so I think one of the reasons people use ABM in the early stage, even if they have lower annual contract values, is to get that quick market response from different segments.
I think the big misconception is that ABM costs a lot of money, as in the end, you could do it with a small budget as well.
Absolutely. I mean, this could be as simple as you writing some LinkedIn email messages to a bunch of people and seeing what the response is. ABM often gets this bad rap as being very expensive with technology, etc. But if I go back to the very, very early days of video, and this was before kind of ABM was a thing, I remember when we had the kernel of a product, I identified 12 people in London that I thought could buy what we were building. And I wrote a blog post for each one of them. Now, that was free. It was just my time, but we were pretty young back then and had no experience at all. And by writing a blog post for each of these individual companies and the people I wanted to get a meeting with, what I did then was made sure that it got across them. Maybe I passed it to them on Twitter or found someone who was connected who shared it with them. And then when I reached out for a meeting, every one of them knew of me in some way as someone who'd written something vaguely intelligent about their context, their situation, their latest earnings report, or whatever it might be. And so I walked in the room as someone who had an interesting point of view, and we could have a conversation together, rather than this 18-year-old kid that didn't know what he was talking about. And so that was ABM in my very first instance, right, which cost absolutely nothing and yielded some great results for us, but made sure that we got to the right people and got a yes, no, or a maybe, got some learning off them.
Yeah, exactly. So it doesn't have to cost money. It will cost time, but in the end, you will get the feedback you're looking for and building that community. I guess you discussed as well, like with your customer discovery. Nice. I think it goes really well into the next question, because this is kind of like the bootstrap way, right? Like, do you see any big differences between bootstrapped and funded companies when implementing a go-to-market strategy?
I think, firstly, if at all possible, you should try not to raise money until you've got some semblance of a product with some semblance of a market reaction. It is so risky to raise money at the early stages where you have many, many hypotheses that are not proven. And you're never going to get to high degrees of proof in the early stage. But the further you get along that journey with more proof and more people who are interested and responding positively to your product proposition, the better valuation you'll be able to raise at, and therefore better planning you can put in place for the longevity of the business. So firstly, I think you should go as long as possible bootstrapped. I know that's not possible with everybody, but there are lots of ways of launching pretty cheaply at the moment, given the audience building mechanisms we just spoke about. It takes time, but it doesn't have to take money. But I do think there are differences once you get going. And if we just talk about a few of those obvious ones, one of them would be the capital that gets put into the business. So clearly, if you're raising funding, then you've got some money to spend in order to kind of break through some of the initial hurdles. And that becomes a forcing function. I've been in the situation of not having any capital, and I've been in the situation of having capital. And there are pros and cons of both. But certainly if you've got capital, then you've got the ability to do more experiments and therefore learn faster, and therefore have more proof points in your hypotheses to go and grow. So capital, does change a few things. One of the things that changes is time frame. Often if you've got capital, burning a whole hole in your pocket. You've therefore got investors who are expecting some form of time frame, and you're probably spending more than you're earning. Therefore, you've got a runway by which you've got to actually make sure you've turned to break even or have reached some proof points that you can raise more funding. So capital can be fantastic, but it brings time frames into focus, and you've got to really make sure you're executing fast. And also, it brings much higher expectations. There's some really interesting narrative in the market right now. Christoph Jans wrote up a few really interesting points on this, that there are a huge number of uninvestable but high potential SaaS businesses now, because so many SaaS businesses can raise a significant amount of money thinking that they've got $1 billion market, but actually, given the competition in the market, they can make a very successful living off 100 grand, 200 grand, 500 grand, a few million in revenue. And so I think it's really important to recognize that the capital brings expectations. It brings timeframes that are much shorter. And so you have to balance all of those up when you're thinking about raising funding.
Exactly. Yeah, it's not just a bag of money. It will bring other things as well to the table. When we talk about challenges, obstacles, have you faced, I mean, of course you've faced them because everybody faced them when going to market. Can you maybe give us some examples of challenges and obstacles you faced when going to market?
Yeah, I faced loads of obstacles. If we let's take three from three different businesses that I've worked with. So IDEO, the business we co-founded, it was a personalization business that used AI, natural language processing, in order to understand the content that people were reading in order to personalize the next best bit of content for them. And our big problem was that we had some very clever tech, but we had a solution that was in search of a problem for several years. And so our challenge was finding that ideal customer, finding that focus so that we could build a go-to-market around it. Because until we understood whether we were serving very big technology businesses or middle-sized financial services business or small trade publishers, all of those would indicate you have a different kind of go-to-market strategy and also a different funding mechanism to go and get them. So with IDEO, that big obstacle was having a solution in search of a problem, needing to identify who we could really focus on as our ideal customer, and then building the go-to-market. And we overcame that by really, I can remember where we went away as a leadership team and we looked at all of the different markets we were selling into and the different propositions we had for them. And we walked out of that room after 2 days, focusing on one type of company, selling one type of, one aspect, one use case of our product. And we bet the house on that. And so we really chose our focus and said no to a bunch of opportunity. If we think about Optimizely, so that was a business formed by acquisition of our business, IDEO, as well as 5 or 6 other businesses put together by Insight Venture Partners. And the challenge there was having a coherent product story, a coherent vision, because you had all these different businesses that had different ideal customers and different go-to-market motions and products that were complementary. We had to bring those all together and tell a new story that unified everybody together, unified the experimentation capabilities from Optimizely with the content capabilities from Episerver, from the personalization capabilities from IDEO, and so on and so forth. So that was a challenge there that it was important to invest time and money in so we could tell a coherent story. And then a Paddle. Let's talk about another challenge that we've been working to overcome. Paddle as a business serves self-serve software companies that go to market with a product-led motion and have a checkout as part of their product experience. And one of our challenges a year or so ago was that we hadn't spent enough time identifying the perfect fit customers. And therefore we had a demand generation engine, but we were putting bad fit accounts in the top of it. And therefore we were wasting money and the whole thing was less efficient than it could be. We spent, Tarshan, who's on our team and our RevOps team, spent about 6 months going and doing a whole bunch of research and coming back with a new set of target accounts that not only helped widen our universe a little bit, but also made sure that the accounts we went after and put into our demand engine and distributed as territories out to our field teams, that they were accepted, that they were valued, and that they were businesses not just that we could close, but that we can make successful over many years. So there's 3 challenges from 3 very different circumstances.
Yeah, and I think with IDEO and Paddle, you kind of had the same thing, right? Where at IDEO, you have to really choose your focus, really pick the clients you're interested in. Same now with Paddle. Like with Paddle, you can't sign up self-serve, right? Like you do some vetting, I think. Was that the exact same thing with IDEO as well, where you didn't allow people to sign up and you had to vet them before they even start using the product?
Yeah, so they have very different go-to-market motions and very different target kind of customer segments that we could go after, very different sizes of addressable universe. So if we take Paddle, so you can self-serve with Paddle, but it does take a couple of risk checks because we need to do some KYC and KYB checks. So we've got that down to a few days now where people can self-serve, but the majority of our business does come through our sales team. And then at IDEO, it was all sales assisted. This was a sales team going outbound and selling. We were winning customers like IBM and Salesforce and Intel by an account-based strategy. Our sales teams and our marketing teams working together to find the buyers within those businesses and go through a 4 to 6 month sales cycle to persuade them that we could really deliver value for them. The other difference, though, as I said, was that IDEO had a very small target list. So we were a smaller business selling into a smaller segment, and we got down to about 200 target accounts we were going after. All massive global enterprises with a high ACV that we could charge them, but a small number of accounts. Whereas Paddle serves many, many thousands of different software companies that are a lot smaller. So we've got a much wider problem that we've got to go and identify and work through the specific identifiers of those companies to see if they're going to be a good fit.
And one question regarding Optimizely. So when all those products came together, you mentioned like we needed to create a coherent product story. I am curious though, because I can imagine that not every client is waiting for all the products Optimizely offered, right? Because first of all, they had these separate products and then suddenly it became, of course, a beautiful coherent product story. But I can imagine that they didn't want the full package. They just wanted to have a certain product. Like did you still have different channels, I guess, within the go-to-market, or I don't know how you call it?
Yeah, absolutely did. And they became more and more unified as we went past each acquisition. But to your point, firstly, there is a very wide capability set at Optimizely now. Content and commerce and personalization and feature flagging and web experimentation and B2B commerce and all these different things, as well as now kind of content marketing platforms where your marketers go in and build their plans and execute their content build. So there's a wide range of capabilities, and there will only be a few big customers that have bought everything. Increasingly, but only a few have bought everything. What we've then found was for different markets, we had to create different bundles of those different products in order to match the market need. So that was the first challenge, was bringing together different products into groups that we called solutions. Then the second thing, as you said, is that each of those individual products pre-acquisition had a different go-to-market motion and strategy and targets. We had to unify all of those into a single demand team, into a single sales team. And most of it is sales assisted in terms of the core products that we see in the North American market. There's a very strong partner channel, particularly out of Europe, that we're now building over in the US market. And so that's a really important part of it. And there's also a small bit of self-serve revenue. So when we step right back and think about go-to-market strategies, they really can be bundled into, are we sales assisted? Are we going outbound and whale hunting? Or are we building something that's product led, that has a self-serve component where we're doing marketing, but there's no salesperson in the conversation, they're coming and buying from us? Then the third one, partner led, channel. Are we building relationships with other third parties? In Optimizely's case, big marketing services agencies that do the implementation and configuration and design and strategy, where they are selling on our behalf. So yeah, Optimizely has all three of those to quite a strong degree.
Which comes back into a lot of podcasts. You don't often pick one channel, sales-led, product-led. You will always have a combination, because in the end, you have to start with sales-led, right? You need to sell yourself first as a founder, then you go into maybe different stages, but it will be a combination.
Yeah, I mean, the two common starting points are sales-led or product-led. There's very few people who start exclusively with a partner-led strategy, because often partners need proof points before they get going. But there are a whole bunch of businesses starting product-led and then building sales on top. But to your point, whether you start product-led or whether you start sales-led, almost always, if you're product-led, you will add sales on top at some point in time. In fact, some of the research says that if you're a product-led business that historically has been growing through a freemium or free trial or paid trial kind of model, then by the time you hit about 100 staff or 150 staff, you're probably hiring salespeople per head faster than someone who's been sales-led, because now you're catching up with building that go-to-market motion on top that is outbound, working off the usage signals in your product-led motion so that you can sell bigger deals to bigger customers. So almost always, if you're product-led, you'll end up adding sales afterwards.
Yeah, let's see let's hear if that's also the case at Paddle, because Paddle, you're now, if Crunchbase is correct, 293 million in funding, or around 3,000 clients using the products. Can you explain, I guess, what is the current go-to-market within Paddle?
Yeah, sure. So we actually bought another company, Profitwell, last year, which has a couple of more products, 3 more products. And so if we think about our go-to-market, let's firstly go back to what products we have. So we have the billing platform, which you're very familiar with, you're a customer of, which takes care of subscriptions and tax compliance and your billing, your checkout experience, and optimizes that globally. So we've got about 3,000 customers using that, to your point. Then we've also, through the Profitwell acquisition, we've got a free SaaS metrics platform, which has got about 30,000 customers, but they're all free. Then we've got a retention product called Retain that helps you reduce your churn. That's a pay-per-performance billing model. And then we've got Price Intelligently, which are the industry's leading pricing strategy consulting firm. And so we've got those 4 different parts of the business, 4 different products, and we've got several customers that are using all of them, an increasing number that are using all of them. So We then have, on top of that, as you said, we've got a self-serve motion, a sales-assisted motion, and a very, very, very nascent partner motion. So self-serve is for the metrics product, where people can come in and use that for free just by going and signing up and filling out the form. The paddle product, you can come in self-serve, and we have hundreds of customers every quarter who come in and transact with us without us ever speaking to them, but go through all of our risk checks. And then, of course, we've got the sales-assisted motion on paddle, the billing platform, as well as on Price Intelligently, as well as on Retain. So there's a real blend there of self-serve and sales-assisted. But then we are now building up our partner channel, making sure that if you are an advisor on finances or funding or an accelerator or a VC or another ecosystem player, that you are able to refer in paddle as part of your proposition or in order to help your customers and therefore get some kind of benefit as a result of doing that. So those are our different top level go-to-market motions. And then, of course, what we're trying to do is balancing those two timeframes that we talked about at the beginning, long and short-term investments. So we're trying to make sure we build our awareness, that people understand who we are, the value we bring, that whatever stage you are as a SaaS founder, then we have something to add. And our vision there is that we want to help SaaS founders achieve their vision by helping them run and operate their companies automatically, their software companies automatically. And then, of course, we've got the demand engine, making sure that we are building a demand system, which is field events and email and advertising and webinars and all of those good things orchestrated against our target market to make sure that we can give them a proposition that they can buy into, we can open opportunities, and we can close business. So that's a brief look at what we're building at Paddle.
Yeah, and it also includes bringing a balloon to space to have the first payment in space, right?
So that's a great example of something that has awareness as well as demand kind of within a single campaign. So yes, a couple of weeks ago, we released a video of how we sent a balloon with a toy rocket underneath it into space, and we filmed it with 4K cameras, and we processed a payment in space, and we showed the checkout of that payment, then brought it back to Earth again. And really what we were saying there is we've solved tax compliance, and we've solved all of the localization and currency issues and payment acceptance issues on the Earth. So now we're going to prove we can do it in space as well. So it was a very brand and awareness play, but embedded within it, we had an ABM campaign. So we were sending custom videos of each company's different checkout to all of our biggest prospects. We also had some swag that we were dropping to prospects and people who were sharing it online. And then we have a webinar with Forrester Research where we're talking about the complexities of internationalization and billing. So we've already opened opportunities, sales opportunities as a result of that. So that's a good combination of some brand and some awareness as well as some demand capture.
And fun as well. If you haven't seen the video yet, go definitely watch it, because it's well recorded, right? It's well edited, so it's a real nice video to watch, in my opinion.
I'm glad you think so, and yes, feel free to link to it in the show notes so we can share with the listeners.
Will do. You already mentioned it a couple of times. Partner-led, you did it at Optimizely. You're now doing it at Paddle. Like, as you know, we're a B2B SaaS affiliate marketing program. Like, how do you see affiliate marketing fitting into a go-to-market strategy?
Go-to-market strategy is a process of experimentation. And if you're not trying new things that are additive to your go-to-market mix, then you're probably missing a trick. Because when you think about the process of scaling your go-to-market, what you find, particularly on the marketing side of things, is you constantly hit new ceilings. On the sales side, you hopefully build some form of linear model where you add a sales rep or a BDR and you know what that's going to do as long as you've got a big enough market and a compelling proposition. In marketing, you're constantly balancing this variable customer acquisition cost by channel and tactic. And so you've got to constantly be trying the next thing to break you through the next ceiling. And so, affiliate marketing is just one of those things that every go-to-market leader should be considering as part of that wider mix. For B2C businesses, it's often seen as something people try quite early. Within B2B, it's more nascent. And so companies like yourself are bringing that to B2B SaaS. And I'd absolutely see it as one of those pay-per-performance channels that has some ability to scale beyond some of your early ceilings to make sure that your brand is out there and your proposition is out there to a wider audience, and you're capturing as much demand as you can in the market outside of your own website and your own sales teams.
We're definitely going to use this in our marketing. It was a good introduction to it. When we zoom out again, I always like to ask these two questions at the end. As in, when we talk about go-to-market, what kind of advice would you give a certain SaaS company in a different stage? And we're going to start with somebody who's just starting out and trying to grow to 10K MRR. Do you have any advice you would give them? I think you mentioned already learning over revenue, building a sustainable advantage, low-cost ABM. Are there any other things you would recommend them?
I mean, fundamentally at that stage, it's about getting those first handful of happy customers, 5 customers, 10 customers, however many it means for you to build that initial base of revenue so you can start stabilizing the business and investing in the future. So you need to do things that don't scale at that stage. You might be traveling around the country, meeting people. You might be going and knocking on doors. You might be, I can remember at one of the businesses I started was a web design agency at university, and we would be walking across the fields from our university to knock on the door of schools and accounting firms and architecture firms to try and get those first happy customers. So at the very, very beginning, it's a case of doing whatever it takes, however unscalable it is, in order to get those first handful of happy customers that then tell you about where your product should be going and also can refer you to future prospects.
Yeah, and that's always a good thing. Like if you have a happy customer, happy user, even though they might not be paying, always ask them, would you know somebody who can also benefit from our tool? It's a really simple question, but it can really help you to get those next clients in. When we go further down the line, what kind of advice would you give to somebody who's growing to 1 million ARR?
I think the advice here really changes based on the type of business. So there are some businesses that can get to 1 million ARR off 1 or 2 contracts if they're selling something quite complicated into very large enterprises. And so the advice would be very different there than it would be for perhaps a product-led founder with, a price point around $1,000 a month or $100 a month, who's clearly got a lot of customers by the time they get to 1 million ARR. So for that first, segment of the business, for the segment of businesses who have, got something that's expensive, we were in that case with IDEO. So our ACV was 200, 300K, and then we could upsell from there. So we had some clients that were, 700, 800K by the time we exited. If you're growing towards 1 million ARR and you've got a couple of initial customers, then really it's about making sure that yes, you're listening to everything those customers are saying, but that you're building for the market segment you want to go after, rather than bespoke building for those 2 or 3 customers. So it's always about listening and learning, but you as a founder have got to make the decision on whether you are building some customized kind of thing, this customized monster, this Frankenstack for that specific customer and their needs, or whether you're keeping an eye on what the bigger market opportunity is. And then, if you are at a lower ACV and therefore 1 million ARR, takes, many tens of customers, hundreds of customers, maybe even thousands of customers, then really at that point, you've got a proper business. And what you need to be doing now is thinking about instrumentation and scale and optimization and making sure you've got the right data coming into your stack so you can make smarter decisions as you scale going forwards.
Yeah, that's really nice. I mean, it always starts with data, and that's what Profitwell does really well, right? As in, I think you already mentioned self-serve. You can sign up for free, then you can get your metrics in order. So it doesn't have to cost that much to get your data in order. There are going to be tools like Profitwell where you can just connect things and get them out there.
Totally.
We covered a lot already. Is there anything, I guess, we haven't shared or haven't talked about today, which you would like to share?
We've talked through a lot. If you've got any other questions, people can reach out. I'm very happy to chat through this stuff on LinkedIn or on Twitter. I think as part of what we're doing at Paddle, we're going to be launching a bunch of education courses, content around go-to-market and around thinking about product-led versus sales-led versus partner-led. There are other people in the market like GTM Partners have got great content here. And then also if you're interested in getting just some free advice on anything that we can help with, whether it's pricing or retention or billing and internationalization, then we'd just love to chat. We're very happy to make some time and jump on a call with you. So just reach out and we'll book that up.
And how should people reach out to you?
Best way is probably LinkedIn. I'm Andrew Davies, Paddle at LinkedIn, or And J Davies on Twitter. And yeah, either of those networks, and I'll respond fast.
Nice. Thank you very much, Andrew, for making the time today and coming on to the show and sharing your knowledge today.
Total pleasure. Thanks so much.
Cheers. Have a good one.
Cheers.
You've been listening to Growing a B2B SaaS. Joran has been ahead of customer success before founding his own startup. He's experiencing the same journey you are. We hope you've gotten some actionable advice from the show. And we hope you had fun along the way. We know we did. Make sure to like, rate, and review the podcast in the meantime. To find out more and to hook up with us on our social media sites, go to www.getredditous.com. See you next time on Growing a B2B SaaS.